This is Trade Flow News, bringing you relevant news and insights from around the world. Trade Flow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets. Oil prices rose on Thursday after Russia threatened to halt oil and gas exports to some buyers, although weighing on the market were concerns that China's extension of COVID-19 lockdown measures would slow global economic activity and hit fuel demand. Brent crude futures were up 94 cents, or 1.1%, to $89.94 per barrel at 14:10 GMT, after falling to $87.24 earlier, their lowest since January 25. U.S. crude futures were up $1.36, or 1.7%, at $83.30 a barrel, after falling to $81.20, their lowest since January 12. Prices drew some support from Russian President Vladimir Putin's threat on Wednesday to halt oil and gas exports if price caps are imposed by European buyers.
Malaysian palm oil planters are letting thousands of tons of fruits rot as the third year of a worker shortage has left companies unable to increase their harvesting during the peak production season. Palm oil output in Malaysia, the world's second largest producer, is forecast to decline, or at best remain unchanged, from last year's 18.1 million tons, according to planters and analysts. Plantations across the Southeast Asian nation are facing their worst labor crisis since the industry began in 1917, with the arrival of migrant workers that are the core of the industry's labor force at a snail's pace. The Malaysian Palm Oil Association's MPOA chief executive Joseph Tek told Reuters, despite the lifting of coronavirus-related hiring restrictions.
Moving on to the top news in the energy sector.
Germany plans to subsidize a basic level of electricity usage for households and set aside cheaper power for small and medium-sized businesses, according to measures set out in an economy ministry paper seen by Reuters on Thursday. Electricity distributors would be required to grant households a certain electricity quota at a discounted price per kilowatt-hour, with a similar contingent planned for small and medium-sized enterprises, the paper said. The stated goal is to decouple the price of electricity from the price of gas, which has rocketed since the Ukraine war and subsequent plunge in Russian deliveries to Germany.
Britain will cap consumer energy bills for 2 years and funnel billions to prop up power companies, its new leader Liz Truss said on Thursday in a bid to tackle an energy crisis that has Europe and Russia squaring off in a deepening economic war. European governments are spending hundreds of billions of euros to help consumers and businesses cope with soaring energy bills as the price of gas, already high post the COVID pandemic, went stratospheric in the wake of Russia's invasion of Ukraine. This is the moment to be bold. We are facing a global energy crisis, and there are no cost-free options, Truss told Parliament, embarking on a major turnaround after ruling out handouts during her campaign to become Prime Minister.
Next, we have the top news in metal markets.
Aluminium and copper prices marched higher on Thursday on worries that stoppages due to high energy prices or other disruptions will spur shortages. Benchmark aluminium on the London Metal Exchange was up 1.9% to $2,277 a ton, while copper was 1.9% higher at $7,764 by 13:50 GMT. US COMEX futures rose 2% to $3.50 a pound. We are seeing output cuts in Europe, so the potential is high for a squeeze higher in base metals prices, especially in aluminium, since it is so energy intensive, said Gianclaudio Torlizzi, partner at consultancy T Commodity in Milan.
Gold prices slipped on Thursday as the dollar and U.S. Treasury yields climbed after comments from Federal Reserve Chair Jerome Powell cemented expectation around a 75 basis point rate hike at its upcoming policy meeting. The Fed is strongly committed to controlling inflation, but there remains hope it can be done without the very high social costs involved in prior inflation fights, Powell said. Spot gold was down 0.4% at $1,711.10 per ounce by 10:02 a.m. Eastern Standard Time, 14:02 GMT, after hitting a more than 1 week high earlier in the session. U.S. gold futures fell 0.4% to $1,721.40. We will now look at the top news in the agricultural sector. Argentine farmers sold a total of 2.13 million tons of soybeans on Monday and Tuesday, surpassing in just 2 days the 667,000 tons sold last week after the government established a preferential exchange rate for soybean exports, the Rosario Stock Exchange said Wednesday. The sharp increase in sales comes after Economy Minister Sergio Massa's announcement on Sunday that set the exchange rate for soybean producers at 200 pesos per dollar, which is above the official 140 pesos per dollar rate. Up until last week, Argentine producers had been selling their product at a significantly lower rate than last year, holding off sales amid increasing economic uncertainty in Argentina.
That is all for today's news on commodity markets. Stay tuned to Trade Flow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at Trade Flow News, which allows you to watch our program on your mobile device or desktop to receive information from there.